Today in the show, we have Lloyds Bank and the blockchain EBL, Securitize Tokenized Collateral, ETHDenver highlights, and so much more. I'm your host, Mauricio Magaldi, and this is BlockDrops, your weekly digest on blockchain for business. These news are not a form of endorsement, sponsorship, or encouragement for consumption and are meant for educational purposes only. In the first drop, we're going to cover something that was almost like a fixture in the show a couple years ago, and it kind of died out in the recent years, but it seems to be picking up again, which is blockchain applied to trade finance. Lloyds Bank announced they're joining WaveBL, which is a trade documentation platform that runs on blockchain. And WaveBL was one of the first firms to add blockchain to what we call the electronic bill of lading. Bill of lading is usually in paper form. It's generated by the exporter when they load the cargo, and the bill of lading moves with the cargo in terms of who has the ownership, and it defines the ownership of the cargo. And obviously, this is moved around the world by a courier or a person that gets it from the exporter, flies around the world with a paper in hand, so to say, and delivers the paper to the importer, which then gets the paper and presents it to the terminal when they can retrieve the cargo because they have possession of the bill of lading. When the bill of lading is in electronic form, it involves cryptography and digital signatures, which makes it much more secure, but still isn't transferable in the way that a blockchain-based bill of lading is, and that's what WaveBL and other firms are implementing when they're bringing EBL onto the blockchain. Now, there's obviously a big push, and this is a paper-ridden industry, the trade finance. But it's interesting to see such a traditional firm such as Lloyds Bank actually stepping into a space that is somewhat seen as not exactly a boom in adoption. According to the note here, the adoption of EBL alone, not blockchain-based EBL, but EBL alone, is around 2% around the industry, which to me sounds a very low number given the amount of benefits, both in terms of security and in terms of efficiencies that you can achieve with EBL, especially an EBL based on the blockchain. Now you could ask me, Mauricio, why would an EBL on a blockchain be better than the EBL in digital form? Because both are digital and both are non-paper. Why one is better than the other? And I would argue that a blockchain-based EBL allows you to do a couple of different things that an off-chain EBL wouldn't. So the EBL is just a secure document, which is secured by passwords and digital signatures. You can have that on the blockchain, but more importantly, on the blockchain, you can actually attach other instruments. You can attach things like letters of credit to the EBL, and by the time the EBL is presented, or the counterpart EBL is presented, and recognized and authenticated against the blockchain, the smart contract that manages that relationship can actually clear the letter of credit and issue the payment to the exporter. And an EBL off-chain couldn't do that. It would have to go through the same banking processes, and it takes days. And a lot of money that takes days obviously costs a lot more. The second thing that I see as a potential benefit is interacting with the GPS data of the corresponding container. And as the container moves from A to B, it is possible for the parties involved to have a better hedging on the FX variation of that particular container. Usually an export-import relationship has a degree of foreign exchange. It could also impact the way that the insurance are managed as the GPS moves along, and then that gets written on the blockchain, and then the smart contract can read that and actually charge a different premium as the container moves along. So having the EBL representing that relationship on chain adds a lot of value to the overarching process and, more importantly, to the financial processes that are attached to international trade, which are the trade finance products. I'm happy to see this from Lloyds, and I would hope that this is the start of a wider movement, which is obviously kind of propelled by the ETDA, the Electronic Trade Documents Act, which was issued last year in the UK. We've spoken at length about this here in the show. So if this is the first step with such a traditional bank, I can only hope that the more modern banks are also going to adopt this. In the second drop today, we're back to talk about tokenization. Securitize, which is one of the most prominent startups in the tokenization front, has announced that they're going to launch a new program using their Securitize Credit subsidiary. It's going to allow borrowers and lenders to integrate cryptocurrencies and other tokenized assets as collateral when borrowing money through the protocol. So Securitize Credit will use USDC as the stablecoin, so people can come and borrow USDC, providing collateral in form of what they call here the private assets. That includes Bitcoin, Ethereum, or ETH, includes digital tokenized securities, and even is prepared to do repo agreements, repurchase agreements, other than loans. So you can actually sell your private assets to Securitize Credit with an agreement to buy back in a predetermined period of time, a month or 2 months, depending on the interest. And these loans that are going to be granted in USDC will be controlled by the exposure of the counterpart collateral. So if you don't pay it back, they can execute your collateral on chain, or if you delay your payment, they can do the same. Or if the collateral, equivalent collateral prices vary, they can actually sell that collateral to offset the potential risk loss, right? According to Carlos Domingo, who's the Securitize co-founder and CEO, he says the following, and I quote, "Traditional on-chain collateral and credit opportunities often lack quality, while DeFi remains inaccessible, especially for institutional investors. On-chain yields, although promising, are hindered by low-risk adjusted returns and restricted access to high-quality income-generating digital securities. Securitize Credit addresses these limitations by making over-collateralized loans underpinned by the highest quality assets issued and managed by Wall Street's top private asset managers." End quote. That's a mouthful, but in summary, what it means is that with the Securitize Credit protocol, you can now, as an institutional investor, get your private assets tokenized, placed into the collateral, and take USDC as loan. So if you're, say, crypto rich and fiat poor, which is how we call people who have, big bags of cryptocurrencies, but they don't have enough fiat money and they don't want to sell their crypto for fiat, so they keep their bags on chain safe. You can actually go and qualify as an institutional investor. If you qualified as an institutional investor, you can go and get your cryptocurrencies or your tokenized assets placed as collateral and borrow USDC from the Securitize Credit program. And then obviously you have to repay it, and you can actually manage that. So it's a way for you to have access to a fiat equivalent without having to sell or liquidate your tokenized assets or your cryptocurrencies, which is fairly familiar DeFi territory. But DeFi territory is the land of degen. It's not exactly regulated. It's not exactly primed for institutional investors. So it's interesting to see Securitize kind of take space in this particular vacuum in the market. Now, another note worth mentioning is that Securitize is not doing this in the US. The US still has a lot of the so-called legal hurdles or lack of clarity for things like tokenized assets and other cryptocurrencies. So Securitize has been operating throughout other subsidiaries, such as the one that they have in Japan. This particular rewards program, the Securitize Credit, is going to be run out of the British Virgin Islands. and it's not going to be available for clients in the United States, Canada, Italy, or Japan. So this is just to say how hard life has been for this disruptive startups when they're coming to market with something that would actually benefit traditional finance, but because they're using decentralized infrastructure, they're seen as a different type of asset class by the regulators. So here's to hoping that not only this becomes something more commonplace across the industry because everybody gains, it's a better risk-adjusted return, but also it will make sure that institutional money can actually come and create more liquidity across the crypto space. In the third drop today, we're going to talk a little bit about the ETHDenver, or ETHDenver for short, a little bit of the highlights of the week. I got really lucky that I was working from Colorado this week, and we took the weekend to attend the conference. So it was really interesting to see this kind of new bullish overall feeling from the industry. I know this is more of a very biased sample, but it was interesting to see also some trends emerging. I'm going to try and talk a little bit about the trends and some of the highlights to me personally. I was able to attend quite a good number of lectures, keynotes, panels, fireside chats. Had great conversation all around with people in the booths of the conference. So it was pretty clear that there's a lot being built. There was a lot being built during the bear market, and it's now time to see how these product solutions are going to perform during what we expect to be a bull run. Again, nothing I say here is financial, legal, or tax advice of any kind, or compliance, or any advice, and do your own research. So one of the things that caught my eye was the intersection between AI and crypto is rampant. Both ways, it goes both ways. AI applied to crypto and crypto infrastructure supporting AI. So this is a discussion that we've had in the show multiple times, and we'll continue to see that in the industry. I'm glad that solutions are emerging for that. Web3 gaming is big. There was an arcade area, all with Web3 games being displayed for the attendees to play. So it was very interesting to see such a volume. Great quality games, not that kind of poor man's version of Pokemon that we had earlier. So interesting to see the development in that space. Surprising to me was a big Bitcoin presence. There were quite a few number of panels and keynotes and discussions, and some builders in the conference presenting their projects in booths. So it was very interesting to see this, what they call the Bitcoin Renaissance, given what happened with Bitcoin since Taproot. Udi from the Taproot Wizards presented a few of his own theories, and it's interesting that there is a lot that will happen, that is planned to happen throughout the year. So we'll keep tabs on this because it's very interesting to see the mother of all cryptocurrencies in a renaissance state. Big focus of companies onboarding users with better user experience. Transact and Wallet Connect are two examples that come to mind. And interestingly enough, crypto politicians were about. U.S. presidential candidate Robert Kennedy Jr. And U.S. Senate candidate John Deaton both had booths in the fair, and both of them had keynotes and panels. So they are being considered the politicians that will help crypto break into the legislation at least. So there's a lot to be covered there throughout the year because decisions in the U.S. impact broadly the whole world. John Deaton is actually running against Senator Warren, who's got her anti-crypto army. Chris Dixon was there, did a panel, did a book signing. Unfortunately, I missed that because the queue was huge and I had other things to do. But I'm hoping to get Chris on the show. So if you're listening to this, Chris, you're more than desired by the audience, and it's super welcome. We'll be super happy to see you here. A lot of ZK. I'm calling this the ZK for the masses. ZK applied for privacy. ZK applied for AI, for LLM data, applied for identity, and even a more like developer UX angle on abstracting ZK circuits for developers and engineers. And of course, my Brazilian folks were everywhere. We had a roundtable between Thiago Rudiger, João, Zecchin, Bruno, Maia at the Brazil Crypto Report with Aaron Stanley. Danimim and Alex Netto presented a talk on building on public goods, which was very, very informative to me. I met with Vini Farias from Cube3, Fabio Seva from Public Good Beer, and Tutski from Pod Minta, and it was really, really great to see so many Brazilian builders embedded in the industry. Happy to see you all thrive. So this is my experience on ETHDenver. I'm hoping I can return here next year with more to tell you about all things crypto. In a week packed full of news, here is more. Midnight, the data protection partner chain on Cardano, which is where I work, opened the devnet to developers this week. South Africa national budget now includes plans for stablecoins and cryptocurrencies. Crypto.com is going to list the BTG stablecoin BTG DOL in their newly announced strategic partnership. Data from analytics firm Dune is now available via Snowflake, the cloud data provider. BlackRock, the fund manager, announced their launch of a Bitcoin ETF in the Brazilian stock exchange B3. Ondo Finance, the treasury tokenizing platform, launched their stablecoin USDY on the Sui blockchain. Crossmint, the onboarding platform for Web3, announced they're acquiring the NFT infrastructure provider Winter. And Lens Protocol, one of the most prominent examples of Web3 social media, is now available permissionlessly for everyone. Catch us online. We're on Instagram at BlockDrops Podcast, on Twitter at BlockDrops Pod or 0x Mauricio. We're on Lens at blockdrops.lens. We have a newsletter on LinkedIn. Write to us at blockdropspodcast@gmail.com, and you can listen to the BlockDrops podcast at Spotify, iColab, Faberbun Tech, and all of the other major streaming platforms. Yay! Shoutouts today to the people who share the links you will find in the episode notes. John Ho, Gustavo Cunha, Stani Kolechov, Max Olsen, Cássio Gusson, Katie Wheeler, Rodrigo Fernandes Tosa, and Aaron Stanley. Don't forget to leave your ratings on our favorite player. This is all for today. Stay rare, stay weird. LFG.